Well, for across two cuts, so 50 in September and then 25 in December. So 75 by year end across two cuts.
And explain why, to the economist's mind, it's going to take until September and then a dramatic half-point cut. I mean, what gets us to follow that sequence of events?
Well, there's three reasons I think we took this path. One is that strength in business spending has been weakening over the course of the year. It looked like it was a government shutdown story early on, but subsequent data, industrial production, the durables reports, the trade report, all suggest a much weaker trend. Equipment spending we're tracking in negative terms. So there's just underlying softness in the data. We were already prepared to make some downward adjustments to the forecast. On top of that, you get the news on trade, which to us feels like an important shift and an escalation in the rhetoric. And then finally, I think you can argue that if this is true and things slow, even if inflation is expected to rise, the funds rate is still well above current rates of inflation. So you might argue that the monetary policy setting is too tight.
Yeah.
Then the argument is, look, if you're going to go, the market's already pricing in 3 to 4 hikes or cuts over the next year. Just deliver that up front, act aggressively, prevent the need to get into the zero lower bound. So act preemptively in a way that can deliver what the market feels it needs, and just do so in a way that's preemptive. The Fed generally does surprise on cuts, not so much on hikes.
That's true. That's true. I'm looking at these comments. I don't know if you just saw them before you came on, from James Bullard. He is now saying that a rate cut may be warranted soon because of global trade tensions and weak U.S. inflation. But he's not Powell, he's not Clarida, and we will hear from both of them tomorrow. Are we going to start seeing a change in rhetoric this quickly?
Probably not. I think that it's hard for the Fed to move that quick without a lot of evidence that things are slowing. I mean, our view is a prospective one where we think the data will accumulate over time. And so that's why we're thinking September and not necessarily sooner. We think it'll take time for this case to build. Now, you could get the Fed to react sooner if markets were to take a more sudden risk-off tone. We don't feel that that's the case yet. So that's why I'm thinking September more than something sooner.
And I'm just wondering, what if they don't? We got to go, Michael. But what if it's all fine? 75 basis points a lot.
It is. I get it. Maybe we're overthinking things here, but we just feel that that's what's coming.
That's all right.